What a wild day in the crypto market. Of course, by now all of you have heard that the United States and Israel attacked Iran. Market plummeted. However, it's more than recovered. Look at this. Bitcoin above 67,000 as I record this video. XRP at $1.37. And actually, we had a 24-hour high for Bitcoin of $67,560. This is the 24-hour chart. Look, we can see we fell off a cliff this morning when the news broke. Plummeting down to just a little over $63,000. And it was the same story for XRP, but look at that. Fully recovered. XRP at $1.37, reaching as high as $1.39 just shortly before I started recording this video. You know why this is? It's because the news, I'll talk more about this in a second, but the news was already largely baked into the price. And I also, like I mentioned in my last video just this morning, I think that's why you didn't see a more precipitous drop. But this has been discussed for a week. So then when what was almost certain to happen did happen, yeah, there was a little bit of a reaction, but very brief, actually. So lots of optimism for the future. Lots of analysts who cover XRP expecting us to hit double-digit price action, including one popular analyst who gives his argument as why he thinks that upwards of $31 this market cycle is absolutely plausible. So it doesn't make sense to get shaken out or emotionally feel down just because you get a move like we had this morning. The best is yet ahead. But before going further, I do want to be clear. I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say are right. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. All right, as I record this video, it is 6:27 p.m. Central Time, Saturday, February 28th, 2026. And I want to share this post with you. This is from chart analyst Psychedelic, and I think he had a pretty good take as to why we've seen what we've seen today. And he wrote here, "Let it play out and observe the price action around key areas." And that's a quote from his own post from 12 hours prior. And he wrote, Bitcoin back over $66,000, and we know it went even higher since then. It says, when you have constant news on something for weeks, the climax of that news almost always marks a key low. The market prices in the possibility of it happening, and thus, when it happens, the market does the opposite of what everyone expects. If something is widely known and understood, it is priced in. The only time in which something that is known and understood isn't priced in is when that news enables things to happen that could not happen before. For example, ETFs being approved was required before the money could flow in. Even then, you will still get some manipulation. A good event equals positive earnings, will produce a bad market move. A bad event equals war, will produce a good market move, because the good and bad parts of those moves happen before the event, not after. Yeah, I think that's a pretty good take. And when you get bad news pertaining to it could be anything geopolitical, but if you're talking military action, war related, history shows that, just let a little bit of time pass and you're probably going to be fine. Here's some data from Ryan Dietrich. Ryan Dietrich is the chief market strategist at Carson Group. He's got a list of various military events throughout history and showing how the market looked 1 month, 3, 6, and 12 months later. And so he wrote, here's a list of major geopolitical events since World War II. Up a median of 5% 6 months later, all of them felt really bad at the time. So yeah, you just wait, and the market does tend to sort this stuff up, stuff out, rather. The only thing I'll just briefly mention, and I brought this up in the last video, is I can't remember what the event was, but at some point within the last few months, there's some event that caused crypto to drop, and it was after markets had closed for the week, so it was probably a Saturday, it could have been a Friday night, but the stock market was closed, crypto went down. And then futures markets open on Sunday, which happens at 5 p.m. Central Time. And so that was the first chance to see how the stock market might react. Futures go down. Sunday at 5 p.m., crypto goes down exactly at the same moment responding to that. So Tomorrow, Sunday, 5 p.m. I'm not predicting that it's going to go down. I'm just saying, hey, it's worth watching it. If it does go down, that would probably be why. But stock market has not had a chance to respond to this news yet. So all I'm saying is keep that in mind. But even if markets go down, this stuff works itself out. The data is the data. Fast forward a little bit, we're going to go up. And I'm going to give you a bunch of macro reasons to be super excited for this year a little bit later in the video. Here's a post from Chart Nerd. And he said, XRP, could you handle the pressure? Well, I certainly can. You can see what he's talking about here. He's warning that there might be one final shakeout for XRP dropping. You know, he didn't have a number listed here, but I've seen what he's talked about, closer to $1.20, maybe a little bit lower than that. But then ultimately having a big burst to over $27, which he still firmly believes is going to happen this cycle. Nothing that's happened with Iran has caused him to change his perspective. And yes, this was a post from yesterday. Doesn't matter. He's been posting today also. Nothing's broken, folks. Just because there was a military action, it does not mean that higher time frame charts are now broken because there was a little bit of a pullback. Doesn't mean that. Then we had, this is a, I don't trust this. I certainly don't highlight this. So some of these expectations for higher prices, I'll buy that they're plausible, but the time frames sometimes seem rather silly to me. For instance, there's a post from Crypto Bull here predicting that in March, you're going to see XRP rocket at $28 and then fall back down to 12. All of this inside of 1 month. And so that was reposted by Chart Nerd, and he wrote, $28 XRP in March is a huge credibility call, man. I'm all for the long shots, but if it fails, you got to hold your hands up, man. Well, he makes calls like that just about every single day, and he has been for years. So I don't know that he particularly cares. I don't actually take them seriously. So it's not that the dollar figure is the problem. It's the incessantly posting this and then constantly changing the time frame. But people seem to like that he posts those things. So I just say, but the idea of getting these higher levels, including this market cycle, certainly isn't crazy. For instance, here's a post from chart analyst E. Gray Crypto, and he wrote, Elliott Wave reality check. Wave 3 equals $15 to $31. So he does still believe that this is absolutely on the table, including for this calendar year. Right. And so he says Wave 1, the roughly 814% expansion fits a textbook impulsive wave. 1, strong momentum, clean channel respect. Wave 2, which is where we are now, he says, the current pullback sits perfectly within normal wave 2 retracements, 50% to 61.8%. Even deeper is valid in crypto. Still inside the macro channel, no invalidation yet, and that's the key point here. When people see prices go lower, they stop paying attention to crypto. They stop thinking that so-and-so is possible, even though they've been dreaming about whatever for real. But then you just let time pass, and things just like snap back into place. This is just constantly happening in crypto for over 17 years now. Just because we went lower, it doesn't mean that we can't get life-changing wealth in crypto. That is not what that means. Then he says wave 3, the only thing that confirms wave 3, the price must reclaim the wave 1 high with a weekly close and momentum expansion. Until that happens, this is still corrective. Wave 2, it can extend or go sideways. Labeling wave 3 early is premature, but we are on the verge of entering wave 3. So he thinks it's happening sooner than later. He says wave 3 confirmation equals structure reclaim. No reclaim equals no wave 3. So that's just evidence we're not in that yet. So says he. It says bottom line, the count is valid so far. Wave 2 is likely in its final phase, but wave 3 starts with confirmation, not belief. So best is yet ahead. It would just make sense, especially with everything that's happening on a macro scale. The best is yet ahead. I'll get into more on that in a second. I have some very exciting and interesting things on that front. There's a post here from Crypto Insight UK sharing XRP hourly liquidity that was reposted by chart analyst Bird just this morning. So market had fallen by that point, of course. And he said, the XRP hourly liquidity map suggests we're right at the edge of a bottom. Final liquidity sweeps, final accumulation. Once this plays out, these levels will never be seen again as alt season kicks in. Yeah, and so there could be truth to that. There does become a point where you're never going to see what so-and-so price level ever again. Just like there was a last time XRP was half a penny. There was a last time XRP was 20 cents. I don't think we're going to see that ever again. And there'll be a last time that you see XRP that's a little over $1, like where we are now, $1.30, $1.40. There'll be an end to this. And so once you reach a new plateau, even if you pull back, 80%, it's depending on how high you reach, it's just not going to happen. So given that we haven't had alt season yet, we'll see what it looks like, but it's going to be some higher plateau. I do believe that's coming. Here's a post from chart analyst Austin comparing XRP price developments to the Russell 2000, and pretty much every analyst that I follow that talks about the Russell 2000 says that yes, it has broken out, including analysts who are not in crypto, just TradFi guys. They say yes, the Russell 2000 is in classic breakout formation. And so anyway, Austin here is comparing XRP to that. He wrote, I believe that XRP looks structurally similar to the Russell 2000 on the larger time frames. The Russell 2000 had a large pump followed by a prolonged accumulation. Then when it finally retested the all-time highs, it had a violent ABC correction before going on to V-bottom and breakout into price discovery. XRP is currently in a violent ABC correction after retesting its previous all-time high. Could a V-bottom that launches us into price discovery come next? Well, certainly possible, especially with the way that so many macro things are lining up. But the Russell 2000, that's small cap stocks index. And that thing only breaks out when there's an increased appetite for riskier assets. Historically, that breaks out, crypto follows that. And the reason crypto's after that is because the riskiest assets have money flow to them less. It says, because as more money, it's global liquidity increases, people, businesses, institutions have more and more money. And then as they increasingly need to allocate it, that increases their appetite for riskier and riskier assets, but it unfolds in that direction. So you have to wait for that to increase before you do see a notable amount of money really finally flow into crypto. And that's when you ultimately will finally get alt season, because especially when you're talking about alts, the further you go out the risk curve, as the appetite for risk increases, you eventually get to the riskiest part of the riskiest asset class, and that's when you get your alt season. But it's that's the order. It's coming. Here's a post from Chart Analyst Mustache. This is the crypto total market cap excluding the top 10 coins. And it's a dominance percentage chart. And he says altcoin dominance is also on the verge of breaking out of a wedge that has been forming for several years. Even if the market does not look like it yet, good times ahead. Yeah, so this is a dominance chart, but if you look at the others BTC chart, which tons of analysts have been talking about recently, that thing, it looks like it has broken out, according to pretty much every analyst that looks at the damn thing. So we're so perfectly positioned, and people are just mopey right now, and it's like everything's looking fantastic, including macro. Take a look at this. This is from chart analyst Dan Gambardello. He shared this with his 313,000 followers on X. He said Chicago PMI just printed 57.7 versus 52.1 expected, was previously 54. He says anything above 50 signals expansion, and this is the highest reading in over 3 years. Serious acceleration in manufacturing activity. Chicago PMI often leads ISM, manufacturing PMI, which prints Monday. Yeah, so there's the ISM PMI, that's the national survey. That's the one that most people talk about when you're scrolling through and you see anything about PMI. It's almost always the ISM PMI that captures data on a national level. That started breaking out for the first time in months. We got that data on February 2nd, and so that had the data for January of this year. And what he's noting here is that, we're going to get another report, by the way, when he says Monday, because it's a monthly report. Monday, we're going to have the latest national data, the ISM PMI, and the expectation is that it's going to continue to be in expansion mode, which is a big deal, because every single time that's happened, it has resulted, what followed always, is ultimately a crypto euphoria, alt season, because it's economic expansion. There's more money sloshing around, and a certain amount of that does end up getting into crypto. So it all makes sense. Macro signals actually really do matter. So what he's highlighting here, this on your screen is not the ISM PMI, it's the Chicago PMI. So this is a regional survey for Chicago and some of the surrounding area. And what we're seeing here is that this thing is breaking out to the upside. This is an expansion. Anything above 50 is considered economic expansion. And this is higher than what the expectations were. It's, again, the figure's at 57.7 for this regional survey. And this is real data from real purchasing managers, just to be clear. The expectation was 52.1. So expansion was expected, but this blew it out of the water. And this is coming in before we get the national ISM data. So fingers crossed. I know it doesn't guarantee you're going to get the ISM PMI, the national survey, above that, but it bodes well directionally. I will definitely say that. Very happy to see this. It's more signal. Everyone's talking about this for a reason. Chart analyst Matthew Hyland responded to that post and shared one of his posts from a couple of days ago. Bitcoin dominance in PMI. Says next PMI update on Monday. He looks like he's expecting 55% for that thing. If that's the case, again, that's directionally the way you want to see this go. That will be more evidence that Raoul Pal's macro theory is correct, that that's going the right direction. It's happening at a time where global liquidity absolutely is increasing, and it is. We're at a new all-time high yet again. Just give it time to circulate through the entire economy, but I can't imagine this is the first time in history this doesn't happen. That would be bizarre. I would love to know why. Unless something happens out of nowhere that dramatically decreases global liquidity that nobody saw coming, I just don't see how people just are no longer interested in risk on assets. It doesn't make sense, especially when you can see that there is an increased interest in risk on assets, specifically with the Russell 2000. And crypto lags behind that, so it just makes sense that we're still suffering while the Russell 2000 is breaking out. ISM's looking great. Global M2 looks fantastic. You name it. Oh, and freight. Let's talk about freight. So Craig Fuller, he's the founder of FreightWaves. It's an intelligence firm that tracks. Basically, they're doing analytics for all things freight, and you can figure out, from an economical perspective, how the United States is looking based on this data. That's the reason it's worth tracking. And so he, who was responding to this PMI news from the Chicago survey, hitting 57, he said, "Oh, baby, Chicago PMI hit 57 into the veins of the freight economy. And this is exactly what we have been reporting for weeks." And so here's another point of confluence, which is why you should think, because I understand any one point, you're like, okay, well, it could be an outlier. Is it going to persist? And so you want to look for confluence. Well, I'm going to share with you some confluence right this very second. So here's his firm, FreightWaves. And they wrote here, Craig Fuller, so that's the guy that founded it, and Zach Strickland break down where rejection rates are spiking, with some markets hitting 40%. So you're talking about flatbed rejections. So most of the time when the flatbed rejection increases, which we're seeing here, again, they're saying in some areas surging to 40% rejections. That's really, really high. It's usually about pricing power. And so it can be due to other factors, such as a driver shortage, trucker shortage, sure. But usually it's actually something that I'd say is more important. And it does signal a powerful economy. This is confluence. That's why I'm highlighting this, because when the economy starts picking up, freight demand rises and rates for hauling move higher. But you see, contract rates adjust slowly. So carriers look at a contracted load and think, well, why would I haul this for less when better paying freight is available? And so they reject the load and chase the higher rate. That's what's happening here. That's because there are higher paying jobs out there. They're taking the better ones, and then the ones that didn't offer rates that were as great, they got to play catch up and adjust to the market forces. So that's why the rejection index jumps. It typically signals strengthening freight demand, the tightening capacity. It can be that. But this is why macro watchers compare it with manufacturing data like the ISM. This is all happening at the same time. It's telling you a story. And when this happens, we know that crypto ultimately plays catch up. That's what I'm telling you. And most people don't get this. And so Craig Fuller here wrote, the industrial segments of the freight economy are starting to surge. Recent ISM manufacturing data is now following the trends that Sonar has been picking up for the past few weeks, with Kansas City ISM at 52.4, a cycle high. So another survey, Kansas City ISM, also in expansion, says this map is so unusual. He's talking about how the center of the country is experiencing what it is with freight. Then we had this with Ryan Hogue, said every major Bitcoin top aligned with an ISM PMI peak. Now flip it. ISM PMI just bottomed and is turning higher. If macro momentum is reversing up, Bitcoin likely already did too. $60,000 looks like the bottom. So It is, and everyone's noticing this, and it's a very valid thing to talk about. Look at all these economic indicators. The best is yet ahead. And then we've got, where do I have it? Maybe here. Here you have USM2 money supply has reached a new all-time high of $22.45 trillion. Folks, this is exactly what we've been told we should expect by Raoul Pal, and it's all unfolding like this, and it has to do with when the debt is rolling. He didn't just, take a shot in the dark here. It's based on data. So we should be having good times in crypto land in 2026. That's what I'm telling you. We'll just keep watching it. Nobody knows technically anything for sure. Maybe you get a weird black swan event that truly destroys things. But outside of that, I think we're going to be pretty damn happy if we just let a little more time pass. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea.